Vince Stanzioni, aka the Millionaire Dropout. One stock you like is Baidu. Now, shares of the internet search giant over in China have been pressured lately because the Chinese government is weighing in on its healthcare advertising business. Tell me why you like the stock when it's under such pressure from the government.
Okay, good. So just before this unfortunate incident happened, they just had results, and the results were very, very good. And a lot of people don't realize, obviously, it's 71% of the whole search engine market. The other thing, it's got a very, very powerful video site as well called QA, which is almost like the Google, like the YouTube, and they're thinking about spinning that off as well. The other thing that people don't realize about Baidu as well, they own like a share in Uber. They own 25% of Ctrip, which is a travel site. More and more Chinese are traveling. So it's not just the search business. Of course, just like Google, it's still the big money spinner. But at the end of the day, the business is doing fine. And yeah, it's unfortunate about what's happened. If those who know, it was a Chinese student who already had cancer, went online, tried some sort of experimental drug, whatever, didn't work, and died. And of course, it does, healthcare does make a lot of money for them in advertising. But overall, the business is still very, very strong. And the valuation now, is reasonable.
All right, and you also like Humana. Now, Humana is in the middle of a big merger with another big healthcare insurer, that's Aetna. Yep. They're also having problems with Obamacare. Their first quarter results last week were really pressured by Obamacare. So why do you want to get involved with the stock now when there's such flux in it?
So this is the whole reason. This is, of course, how we make money, and it's obviously an arbitrage deal. And this is the thing you very rightly say about the Obamacare. This is why they have to merge, because you probably know Cigna is also has another merger going on as well with Anthem. So there's two at play here. And the reason why they're going to merge is obviously economies of scales and what have you. Now, this is the classic arbitrage trade where I believe the deal is going to go through. We've already got quite a lot of states, including Florida, have agreed to the deal. So it's just a time element. You've got a cash element, which will be paid, plus you'll end up with shares in Aetna. Now, right now, they're trading about 22%, 23% discount to the merger. So it's almost like waiting for time. Both sides want the deal to happen, Greg. And don't get confused with some of these mergers lately, like the Pfizer deal, where there's a tax advantage. It's not being done for a tax advantage. But you've got both sides that want the deal to go through. The problem is obviously you're just waiting for the government to play. And there's I can see what it is. They say, oh, well, hold on. If this deal goes through, costs are going to go up, care's going to go down. But I believe the deal will go through.
All right, well, you also like VCA, ticker WOOF. They're in the animal healthcare space. Stock's having a great year, up about 16%. So I guess people have jobs, they have more money, they're going to spend it on their pets. Is that the bull case?
Yeah, and also what you've got the retired, because the kids leave home, they're not going to have many more children. Now the pets become the children. It's a funny story. I know somebody that spent over $20,000 on their dog to keep them living an extra 2 years. Now, of course, the replacement of the dog, cost of the dog is a couple $100, but you can't tell that to a pet owner. So they're doing really, really well on that side. They've got these doggy day camps as well, animal hospitals, and like you say, people will spend money on their pets.
All right, and then finally, you are a fan of Valeant Pharmaceuticals. Now, this stock has gotten killed this year. So why do you want to step into it, especially when you were shorting it not too long ago?
Okay, so I turned over, and in fact, I met Bill Ackman a couple of weeks ago back in London. Some of you probably know he's got a 9% stake in the company. I haven't liked this stock in the past. I was short. This time last year, I was short. It got to the point where to be a short seller, the risk was starting to get too much. So I closed out about 2 weeks ago. If you follow the news, a lot's happened in the last 2 weeks. You've got Bill Ackman's now on the board. You've got Joe Papa's come over from Perrigo. They've managed to, in fact, as you saw today, their accounts are starting to get back into order, and they'll start reporting more normally. So you get to the point that the company, it's no longer worth taking the short. And like you say, I've turned it round. You've got some brands like Bausch & Lomb, which they're not going to sell. That's a key business. They will probably have to get rid of some of the smaller non-core businesses. But now at this sort of $30 mark, there's some value there.
All right. Well, thanks a lot for coming on and talking about those
much.
stocks. Thank you for watching The Street.